Good morning, story trading VIPs. Markets are down again. There's some bad news out of the Bank of Japan. Overnight, they are, let me fix this background here. They're tightening now, like the rest of the world. Inflation concerns out of Bank of Japan, money moving into bonds, out of stocks. Moving into Japanese bonds and out of stocks. So, not looking good on the macro. So I just want to remind people, every morning we come on this show and we look for stocks that can buck the market trend. We look for story trades based on catalyst, sentiment, technicals that could do good for that day or good as a swing trade or good entries for a long-term position based on the combination of those four pillars, right? But we are still in, what I'm calling an orange alert mode. I recently started consulting for a hedge fund, and we've set up an alert system. We're in orange alert, been thinking about going to red alert. We've been like that since I joined the hedge fund early November. And that means we're 3-2 short versus long, right? So 15% short, 10% long, and 75% is cash and day trading and selling options, right? So just keep that in mind. We come on here every morning and very often, in fact, and uncannily, big percentage of the time, we're able to pick stocks that buck the market trend, that do well during the day, but it's been tough in the past week. We've had really mixed results 2 of the past 4 days. We've been having a very hard time finding stocks that can buck the market trend. So the market's in a very difficult spot right now. So just keep that in mind when it comes to risk management. You can manage the risk how you like, right? If you want to go all along, you could do that. If you want to, have hedge, you could do that. But I'm letting you know this market has been bad for a long time. We know that. And I still continue to think it's pretty bad here. And I think I'll just repeat this. I think we're at the beginning of a bear market, right? Everything we've seen here on QQQ SPY has just been really a correction in a bull market and taking the extra liquidity out of the system. And now we're back to, near the pre-COVID highs. And now this is where you start pricing in recession. So I've been saying that for a long time, and I believe we're there. And I think the rest of the market finally sees it. And when the rest of the market is seeing it all at the same time, you have the risk of a crash, right? 2 things happen when everyone is on the same page. Either that's the bottom or everyone acts at the same time and you have a little bit of a crash. And I've been talking about we're in flash crash season since Thanksgiving. I think the risk is here over the next couple weeks. It's after Thanksgiving through the end of January. That's your very volatile period and risk of flash crashes. I think the possibility is there. QQQ can re-challenge this low. Let's go to this look over here on the 1 year. You can see right here, bottom there is 254. Let's round it down to 250. So I think 250 all the way to the pre-COVID high of, let's call it 235. So 235 to 250 is an area I'm concerned about crash over the next few days or the next few weeks. Now, it may not happen, but it's good to think of those possibilities and to maybe take some risk off the table or have some hedge on. You can play it how you like. So keep that in context in mind. And we had the catalyst overnight about Bank of Japan that may accelerate some of this. That's why we're down this morning. So keep that in mind. Charts look terrible. The generals are being shot. Apple is very close to 52-week low, 129 there. That gets taken out. You move to like 114, 112 to 114. So, Tesla, new 52-week low. ARK, new 52-week low, which is a little bit shocking to see after, it's had a complete .com-like bust in terms of its bubble, and it's still being taken down because the generals are going down. So not a good environment at all. Now, keep that all in mind. Do what you have to do, but we're still going to, on the Story Trading Show here in the morning, try to pick winners for the day based on our 4 pillars, and we may have a few for today. It's been hard. It's been 50-50, like I've been telling you for the last week or so. But TGB, that's the first one I'm going to bring. The news just came out right before the market opened. It actually jumped into some of the $1.29. TGB is a strategic partnership with Mitsui to develop Florence copper. Hopefully, I tagged Matt S, who told us about this, so hopefully he can tell us what he thinks about this. But it looks like there's a valuation in here. Yes, there's a $50 million initial investment to invest into this mine, and they get 2.67% of the copper produced. That doesn't tell you much about the valuation, but then it says, in addition, they have the option to invest an additional $50 million for a 10% equity in the company. Now I'm reading this a second time. I'm not clear. The first time I read it, I'm like, okay, the first 50% is not for first 50 million, not for any equity. Second 50 million is for 10%, which comes to a 500 million valuation. But now that I'm reading it, I'm not so sure. It says for a total investment of 100, which is a 10 million, 10%. So let's see, is that $1 billion valuation or is that a $500 million valuation? I'm not sure. Okay, but you can see the market cap is $350 million right now. Now, these calculations much more complicated than this, right? Because there's all kinds of other things in the share structure and warrants and things like that, which make it hard to do a precise calculation unless you're intimately familiar with all of that. But given this catalyst, and I know Matt has been telling us, has been waiting for a catalyst that he thinks can take this to like 150 or so. Is this the catalyst he was waiting for? Let's see what he says. But the math, back in the napkin math, looks interesting to me. So I got in at 129. It's gapping above the 20 DMA. So this one could be a higher probability pick for today that can buck the market trend. You got your catalyst. You got the technicals above that 20 DMA, multiple pillars at work. Next one, CNHI. CNHI, this is an ag stock you should be familiar with. I've talked about it. We played it on the earnings gap over here for a couple days, had a nice run. Didn't hold it all the way. Maybe should have, but it's been on a big run. And then this morning you get Credit Suisse coming out with a $21 price target, gapping over the 20 DMA right here, or flirting with a gap over the 20 DMA. Very close. Yeah, there it is. Now you can see that candle. Gapping over the 20 DMA, relatively low RSI that looks like it wants to curl back up. The recent high was 1674. So this is one that can have some momentum today. And I've noticed ag stocks have been relatively strong the last few days. You can see the PE here of just 12. So CNHI, another one to look at for today that could have a relative outperformance. CTLP, well, this has been strong, holding up. We've been on top of this since 340, but it's been having a hard time really breaking out with the market breaking down, but it's been kind of holding its own. Another insider buy last night. So we had the CEO buying Friday. We had the CFO buying last night. So I still like this for a move to 430 plus, but it's been hard swimming upstream against the market for this stock. There is risk to the 20 DMA downside here before it takes off, but maybe 2 Form 4s in a row will be enough to get this going. So I'm still holding my entire swing position, overweight swing position that I got in last week, still holding that, still positive on that. Here's a risky penny stock, BRDS, which I took a small position in and I'm down on, bought at 21 cents here. So you probably want to avoid penny stocks like this, but it did seem like some good news here. Bird Global announcing a proposed merger with profitable partner Bird Canada. There's a bunch of financing included in there, 32 million of financing. Always good for a stock like this. I don't know the exact balance sheet and what their financing needs are, but balance sheet has a lot to do with why these stocks go down. And now they're merging with a profitable company, getting some cash, positive momentum to the 50 DMA is what I was thinking this morning at 29.30 cents. I thought it was breaking out of the 20 DMA. That's why I bought. As soon as it broke that 20 DMA at 21 cents, I got in right at 21 cents. But this is very, very, very risky and can just as easily go down. And you can see that pop didn't quite work out. So I'm poised to lose a little money. You got to know your risk and size it so properly. So that's a very small position for me. So it's not going to kill me. And hopefully I'll make much more at TGB this morning. All right. Just want to point out some news. Well, we know Tesla is not looking good now. Below 150. This is a very important level. And Elon Musk has been radio silent since he said he was going to abide by the Twitter poll. And now it looks like his hedging has made some comments that maybe imply that he won't be abiding by that poll. So that's not good for Tesla, unfortunately. And if you kind of zoom into this area, hopefully we don't crash here. This is from September 2020. You can see this is the area of support we're playing in. And it's not really pretty. If it breaks this whole range, the bottom of this support range is more like, what's the top of that candle? You're talking about 120s and 130s. The 120s to 130s a possibility here. This is an important level right here. Low 130, 132. What's the bottom of this candle? 135, right? So right there where it kind of broke out, this is the area, the next area of concern that it can drop into if we don't get a catalyst to turn this thing around. And I think it's going to take a catalyst. I don't think this thing's going to bounce off of technicals at 146 or 145 or even 140. We need a positive catalyst for this to turn around. It broke through 150, so this has been so far now a bad trade for us, buying that 200-week moving average and now the 150. So if you don't get that catalyst, you can see that downside there, another 10, 15, maybe $20 on Tesla, unfortunately. So we got to watch that closely. Lucid, some news out. They did completed an ATM offering, a little bit of positive momentum this morning, raising $1.5 billion, I think it was. And I'm not going to play this, but yeah, theoretically it has room to the 20 DMA, but man, swimming upstream in this market. 860, 869, and I'm not so constructive on Lucid long-term luxury EV space going into a recession. Tesla's the only profitable EV producer, so they have two things going against them. Lucid, it's the profit margins probably not nearly as good as Tesla. Plus, I think they can have a demand problem with the luxury sector going into this recession. So I don't love this long-term at all. I've been completely avoiding it. Really since the IPO. Should have avoided a lot of other things too, but yeah, Lucid, you can see it. It might be good for a move. I don't love the fundamentals here on Lucid. Okay, SoFi, more insider buys by the CEO released last night, getting a little pop pre-market. This too, I'm not so keen on playing myself because of the sector it's in. Consumer finance. I don't know that that's a great sector to be going in a recession. I don't know what sort of risks they may have going into that, but that's not memories from 2009 going into a recession that might look like 2009 doesn't really look appealing for me to jump into SoFi. I want to point out MSOS. This is the cannabis ETF has really crashed because this bill did not get passed by the Senate yesterday, the SAFE bill, but it's still on the table for next year. Some Republicans saying they're open to it. I don't know, man. I want to learn more about this. We actually have been in touch with the management of MSOS. We're going to try to get them in for an interview. I want to learn more about this fund. Is it passively managed? Is it actively managed? What's in the fund? What's the makeup? I don't see it here. Like if I get a portfolio, let me see. Sometimes I see them for ETFs here. I don't see it. It tells me what stocks they own. So it requires some research, but a big over 50% down in 10 days. And this type of news often is an opportunity to buy. So I'm not buying it yet because I don't know enough about it, but I just want to put this out there in terms of price action and catalyst, and kind of it was sell the rumor, right? That, probably a lot of people thought this was not going to pass, obviously, since early December. So it was sell the rumor, it's not going to pass, and then buy the news. It's opposite of buy the rumor, sell the news is a possibility here, I think, for MSOS, if you know more about the company, something to look into. All right, GeoCXW, man, we did a whole thing yesterday. We even had a post-market wrap and brought on Chris and Tony to talk about Title 42 expiring tomorrow, and that was the basis for this. I mean, last night at 6 p.m., I'm on the Wolf Financial Spaces show telling them the thesis, and then I wake up this morning to find out at 6 p.m., news came out that SCOTUS, the Supreme Court, put a temporary stay on the expiration of Title 42 pending a decision or something, or pending a court case, something like that. So basically, Title 42 is not going to expire tomorrow. So I'm not playing games here, right? If I have a thesis and it breaks down, I'm not a technical trader, right? There are technicals we looked at. Obviously, we're hoping this 20 DMA was going to break right to the upside, but part of the story broke. That the catalyst and the sentiment around Title 42, just died. So when my thesis breaks, I get out at any cost. That's how I trade. So I was able to get out at a good price. I had a nice amount of shares too, so I cut my losses. Got out at 1065 this morning, and but not necessarily is Title 42, not necessarily is this play over. There may be a court extension. We have to see what the court says, right? So we're going to keep this in play, see what SCOTUS says on Title 42, and it's something we may dip back into at some point. The PE, very low for both GEO and CXW, which this 1201 is not really meaningful. That's a paint job over there. So that story trade idea just like died before it even started. So out of GEO. All right, I want to mention lithium. LAC is buying a lithium company here, Arena Minerals. And it looks like, now it's hard for me to do this kind of math. I put it out there for someone to do, but it looks like Arena math, and we'll have to wait till the market opens to see if I'm correct. But it looks like this may be being bought for 100% premium. So maybe it'll open around 70 to 80 cents. We'll see. I could be wrong about that math, but we'll have to see. If that's true, there could be positive sentiment around other lithium miners. And they put two out here to look at, LIACF, which you should be familiar with. We've been talking about a lot, and LLKKF. So these are two. None of these three trade until 9:30 a.m. So something to look at over here. LIACF, I've been looking at anyway to potentially buy a pullback at $2 at the 200 DMA after uranium spin out news. So now you may have a double catalyst here. Speculation that, hey, their lithium mines may have more value. They could be bought out, and M&A activity in the industry, plus uranium spinning off. So that's something to look at. Potentially, who knows? Maybe it bottoms right here at 210 based on this news, or maybe we still have a shot at the 200 DMA. But that's something I'm going to be watching. I tagged a couple people who are familiar with lithium in our rooms and would like to hear what they say about that. Man, I'm running late. Let me just tell you, Clearfield. We just released internally a highlights video. It's very good. We put a lot of time into putting this video together because we know people don't have patience to sit through like an hour interview. So we spent time and money and help from people in the community put together a 5-minute highlight reel of the Clearfield CEO interview we did the other week. And I really encourage you to look at it because it tells you all the important stuff in 5 quick minutes. That's available for our VIPs today. And then later tonight or tomorrow, probably tomorrow, we're going to release it to the public. So if you're a VIP, go take a look at that interview and you'll have a market edge in terms of understanding the Clearfield opportunity. As far as technicals go, I've been talking, hey, in a market wipeout, this can hit that $87, multiple support levels here, $87 and the 50 DMA rising, possibly to meet it right there. Possibility of downside to 87 fundamentally. You know, like if the market was healthier, I would say it wouldn't go lower than this at the gap fill around 95, but technicals take over. Technicals take over when there's a market macro situation is very bad. So possibility of the downside, I'm still looking at like, you know, hopefully breaking out to new highs after this earnings comes out in like 6 weeks. So potentially a huge opportunity here in Clearfield. Just want to note relative strength in VTSI yesterday. There's been some positive news, you know, and you can go in the VTSI research room and see what that news is over here. But, you know, I don't think it's anything to write home about, you know, as far as a story trade goes. Obviously, has room to the 20 DMA 450, just something to watch. I have a long-term position in this. I'm not actively trading it much. It's hard to trade because the volume super low on VTSI. I used to try to trade it, but I kind of gave up. I just have a long-term position since it's so difficult to trade there because of lack of liquidity. And then DRIO held up nicely yesterday after the news. There was a buyer, and it was like a hidden buyer. That's how I know he was a big buyer. He was not showing his bid. It was like 100 shares showing at $4, and it held the entire day in a really bloody market. Today's data that was released on their musculoskeletal solution. I don't think that's anything that's going to cause the stock to quickly re-rate. So we continue to watch DRIO and hope it holds $4 in a market crash. That'll be great. Want to point out relative strength in air at $22. Amazing. Bouncing off the 50 DMA several times. Very high PE, and it's really holding up. Unbelievable. What's her PE at now? 69. So interesting, the relative strength here. I think there's possible downside to about $20 on air as the next support if the market wipes out. But I've been very impressed at that $20, $22 support. Maybe it doesn't get there. All right, want to point out last thing here. Yesterday in the fund that I am now advising for, we did a rotation. We have 10 long-term positions, and 2 of them are RELL and MBLY. So we just reallocated this because RELL was down significantly yesterday. We wanted to take advantage of that, and MBLY was up significantly in a down day, and we are overall up significantly on MBLY. So I thought that was an opportunity to rebalance and take some profits out of MBLY and put it into RELL on that dip. So just giving you an update on that. You can see with the 20-week MA over here at $20 roughly on RELL. So a lot of stuff we just went over. Market, I don't like it. Very tough to buck the trend. I think the two best candidates for possibly overperforming today will be TGB and CNHI. You can take a look at those charts on the catalysts, and maybe CTLP. But I love the set news and the catalyst, and I love what's going on with CTLP. But it's been having a very hard time bucking the market trend. I just hope it's like stacked catalysts and enough catalysts here now with 2 Form 4s in a row, and after the investor event last week, that maybe we can pull out a green day on CTLP on a red day. That's what I'm hoping for, but that's just hope. So we'll have to see. Thank you for joining us, guys. I will continue collaborating in the rooms. And you guys, please, I can't do this without you. It's so much stuff here. I'm here to basically soak it all in and understand the big picture. I'm not an expert in any one area at all. So everyone in the rooms, you guys give the expertise, the overview, and I put it all together with the 4 pillars and try to come up with trade ideas. So keep the collaboration going. We really appreciate it, and we'll see you in the rooms. Thank you, guys.